Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 13th, 2025, and we're diving into Absci's second quarter 2025 earnings report. Absci, a clinical stage biopharmaceutical company, is making waves with its generative AI-driven drug discovery platform. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ABSI's innovative approach to drug discovery is certainly something to watch, and their latest earnings report provides some interesting insights into their progress and financial health.
Revenue and profitability overview. Let's start with the financials. Absci reported a revenue of $0.6 million for Q2 2025, a decrease from $1.3 million in the same quarter last year. John, what does this tell us about the company's current financial position?
Well, the decline in revenue is notable, but it's important to consider the context. ABSI is heavily investing in its R&D, with expenses rising to $20.5 million, up from $15.3 million last year. This increase is primarily due to the advancement of their internal programs. Despite the net loss of $30.6 million, these investments are crucial for their long-term growth and innovation.
And what about their selling, general, and administrative expenses?
Interestingly, SG&A expenses decreased to $8.5 million from $9.3 million, mainly due to reduced stock compensation expenses. This indicates some level of cost management, even as they ramp up their R&D efforts.
Strategic initiatives and collaborations. Absci has been active on the strategic front as well. Can you elaborate on their recent collaborations and partnerships?
Absolutely. ABSI expanded its collaboration with Almirall, focusing on dermatological indications. This partnership could potentially bring in up to $650 million if all milestones are met. Additionally, their collaboration with AMD aims to scale ABSI's AI drug creation platform, with AMD also making a $20 million strategic equity investment. These partnerships are pivotal for ABSI's growth and technological advancement.
And they recently raised significant capital, correct?
Yes, they raised approximately $64 million in July 2025 through a public offering and their at-the-market facility. This strengthens their balance sheet and extends their operational runway into the first half of 2028, providing them with the financial flexibility to pursue their strategic goals.
Pipeline progress and future outlook. Let's talk about Absci's pipeline. What are the key developments we should be aware of?
ABSI is making significant strides with its pipeline. ABS 101 is in a Phase 1 trial with an interim readout expected later this year. ABS 201 is set to enter a Phase 1 THAF-A trial in early 2026, targeting androgenetic alopecia. ABS 301 and ABS 501 are also progressing with promising preclinical results. These developments highlight ABSI's commitment to advancing its innovative therapeutics.
How do these pipeline advancements position Absci for the future?
These advancements are crucial for ABSI's future. They not only demonstrate the potential of their AI-driven platform, but also position them to address significant unmet medical needs. If successful, these programs could lead to substantial market opportunities and reinforce ABSI's leadership in AI-driven drug discovery.
EPS forecast and market reaction. Now let's discuss the earnings per share. Analysts had forecasted an EPS of 19 cents, but Absci reported an actual EPS of 24. How has the market reacted to this?
The actual EPS was below the forecast, which might raise some concerns among investors. However, given ABSI's strategic investments and pipeline progress, the market reaction has been mixed. Some investors are focusing on the long-term potential rather than short-term earnings fluctuations.
Do you think this will impact Absci's stock in the near term?
It's possible we might see some volatility, but for investors with a long-term perspective, ABSI's strategic direction and pipeline advancements could outweigh the short-term EPS miss.
Key takeaways. In summary, Absci's Q2 2025 report highlights a company deeply invested in its future. Despite a revenue dip and an EPS miss, their strategic initiatives and pipeline progress are promising. John, any final thoughts?
Absci is a company to watch. Their innovative approach and strategic partnerships position them well for future growth. Investors should keep an eye on their pipeline developments and collaborations, which could drive significant value in the coming years.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Absci's performance in the comments below. Until next time.